Went to a football game yesterday and got totally sunburnt. So it's all it's been a fun slash painful weekend. I know. Yeah, give me a break. Yeah, I mean, hey, look, the last few charts you sent me have been great. So like I'm impressed that you're now when you share stuff, it's on point. So that's good. Yeah, I mean, that's the thing. I can explain it 1,000 different times, but everybody gets it at a different pace. And some people get it quicker because of their experience, like their past experiences. It just kind of clicks in their head, and other people, their past experience holds them back. I mean, even I had that same problem kind of developing this. I was like, no, I didn't, I kind of almost had to force my personality into it. So, I mean, it happens. So, yeah. So it's kind of both. So like on NQ, just as an example, we had these two legs, and anything you're doing inside of those legs is not containment until you have tested both lowest and highest of the leg, right? So on these legs up, you came down, like this one was already tested right here. Came down, tested that, which is why you got these bounces higher. And then when you came down and tested the low, you just flushed right through. So once we came back up from here and came back up and tested these highs, which were already kind of tested anyway, you're contained. There's no new first touches inside the leg, which is containment. Um, then you had a fresh first touch down here. It led you up to these smaller legs, but these are already tested. And then down here, people were trying to buy it again. This is still contained within this leg. So while some smaller legs potentially were not contained over here, you've got to be aware of what's going on in the bigger picture. So there were probably some valid trades to be had on the smaller, like the last few days, but I don't care. Like I want to see bigger legs get formed because that's when volatility picks up. Like all these inside legs, I mean, they're going to move around and you're going to be able to get your R for the day and no big deal, but you're not going to get those outlier moves until you've made new, bigger legs. So just always, this is the thing, it's multi-time frame. You've always got to be balancing both. And then when the smaller and the bigger line up, hit it. You just go for it. Now, it depends, to me, it kind of depends on how long ago the bigger structure was formed. Because I do give a little more weight to what's going on now. Because if you're retesting like a continuation short that was formed this morning, and it's also lining up with, you just created a failure short that's from like a month ago. That's context, but today's participants, they're focused on where that support was broken today. So the big thing I like to see is, number one, the levels line up in close proximity to each other. Like your bigger level preferably is within the stop range of your smaller setup. Because sometimes you're going to have a smaller setup and the test of that bigger level might slightly exceed what you would have put on a stop for the smaller. In that case, it can go both ways. You can get stopped out on the smaller and then it hits the bigger and then you got stopped out at the high. No big deal. Other times it hits the smaller and it reverses. So I do give weight to the immediate as long as it's valid. Yeah, you're just going to get activity there. Now, like on this SGOC example, I think I was talking about how momentum had shifted, right? So when momentum shifts, when I talk about liquidity, is it's going to hit the level, it's going to bounce, but it's only because momentum has shifted, it's only going to go probably up one level. It's not going to be a reversal. So you see, like, just in this example right here, we have this reversal, and this level, this high, was liquidity because it got above this segment, which is where you typically see liquidity come from. It tested support that was lost in here, not precisely, but right in here. And then it comes back and tests your continuation level. So this was liquidity. This is your reversal level. And then when momentum shifts, that would flip upside down. So now you've got liquidity here up to your 3-leg flip, and then you continue lower. So when I say it's just going to be liquidity, I'm saying I don't believe it's going to be the reversal area because momentum has shifted. So like I prefer to trade with momentum, and everybody kind of thinks, oh, we catch bottoms and tops here. We don't. Like we are aware of where they are. And if I see momentum shifting like via accumulation or distribution into a level, I will try to catch that bottom or sell that top. But if it just comes barreling into it and momentum has just shifted from up to down, no, that's liquidity. Not really. Because price traded there, so you can't ignore it entirely. There are, it gets kind of difficult when if you want to trade like parabolic small caps. Sometimes they leave massive wicks, but inside those was price action. So yeah, I don't really ignore them. It's more about paying attention and figuring out which ones are more important. Yeah, and that's another thing. When they're huge wicks like that, I am kind of leery of it because I know probably not a lot of activity happened there. So I don't ignore it, but those are not my favorites either. No, I mean, I think the best way to do it as you're figuring out targets, obviously you still want to be trying to figure out targets while you're doing this, right? Like you want to have an idea, like this is where you're testing your theory of make sure I have targets right. When I enter this trade, I think it's going here. Now, until you have that confidence, I don't really, I wouldn't think it'd be a great idea to try to hold out for those levels if you're not confident that's where it's going yet. And rather manage your trade based on your R multiple. And if it's, if it's a small R trade, then yeah, maybe tighten your stops a little faster. Yeah. Yeah. Cause Tony and I we had a one-on-one, last week or yeah, last Monday. And, we were talking about what I like to see for setups. And it's kind of what we had today or on Friday in the NQ example. Well, no. I mean, don't put yourself down. Tony, Tony's going through the same stuff you are. So, I just happened to have just had a one-on-one with him. So he's a little more clear on what I'm talking about. So the look I like to see for like a long with momentum is, you have your standard 3-leg build up. And then what I really like seeing is just this build of price action into, you've got your leg 1 up and your leg 2 down. And now we have this pressure building right below that high, right? Right. But this is kind of what I like to see for a momentum trade, because it has this pressure building and then it finally breaks out, comes back down, tests, and those are what are more likely to continue, in my opinion. And it's the same thing that happened on NQ. Was if you zoom out and look at it, it happened on the smaller and the bigger. But if you look at it, we were building this pressure to the downside inside this leg. Test, test, zoom in, and you had the same thing, test, test, and then it breaks both of them, retests, and goes down. That's where, when you have that pressure built up, it's like a floodgate. And when the floodgate opens, this is when we trade momentum. So otherwise, if it's not building pressure, you're kind of you're waiting for lowest untested, you're waiting for highest untested, you're trading things as they develop. But when it's built up like that, that's when you've got to be ready to act and hit your level right after it loses or right after it gains. It depends. Yeah, it depends. So you've got this is the good example that we were just talking about. The same thing was happening up here, where you're building this pressure into this high, and then it took off. The difference is we had this level that got gained in this process, so you could buy right there. And then it took off. It didn't have, see how to me, there wasn't a lot of buildup here, right? You accumulated down here for this move, but you didn't trap a lot of shorts that were trying to reshort right here. Like they were getting stopped out right up here, but not enough in order to propel you higher. And it did try, but instead you ended up distributing throughout here and then you broke down. So it doesn't always work. I mean, not everything's perfect, but there is this scenario where via segmentation you have failed to lose something already, so you can buy this level for the new high. And because I don't have a lot of context in here to buy this continuation long, this was more of a, let's see if this holds level. And if it doesn't, I'll take my money and I'll go. Yeah. Yeah, anytime you break a third leg, you have the potential to set up a failure. And trend satisfaction works both ways. Trend satisfying is getting above or below the third leg that lost or gained. Like the one that brought you down to where you are or brought you up to where you are. If you get below that, you satisfied trend. But the other way to look at it is, you can look at it at the same example, SGOC. You had the new high, then you created 3 legs by going to the new high. You distributed, you lost the segment that made the new high, which is what set up this short. So really, I mean, I feel like it happened on a smaller time frame, but I don't even know if it'll let me go back that far today. No, probably not. That doesn't make any sense. Thursday, Friday, maybe because it's Sunday, it's not letting me do it. All right. Well, yeah. So trend satisfaction is not something you need to worry about necessarily, but just yet. But pay attention to it when a new third leg gets created, or gets, like in this scenario, it gets created and we fail to make new highs. That's a classic example right there. And this happens a lot, this pattern. Yeah, you might, I mean, you might be able to screen share. I think I have it open to where you can screen share. Okay, yeah. No, no, I mean, it definitely is fine. It happens all the time when you get these little 3 legs. I mean, it's 5-minute chart, so I wouldn't necessarily call them too small, because that is some decent movement. Yeah, I mean, I don't see anything wrong with that as long as they're valid, Yeah, yeah, that was down here at the bottom. That was definitely, that's getting used as support there. Yeah, man, it sounds like it. Yep. No, I mean, first of all, it's pretty tested over here. It's 857. You see it right here. It gets tested, and it almost comes back there. But I mean, it was a level. It's just not fresh to me. So nothing wrong with the level. Just not something I would trade. Right. And CLOV is another example of momentum shift. Like we came back down. This kind of killed the momentum, and then we failed. So while this was a valid level, it's liquidity. Yeah, I don't get it. This is it's a story stock again, and these people just they want to hold till forever. It hurts my brain. Well, I mean, you're posting proper levels. The big thing is making sure uh, some other people have the same issue is not setting your sights on these levels that are so far away that you're just kind of sitting around doing nothing. And it's not necessarily that doing nothing's bad. It's that in your head, you've built up this level, right? And okay, this level's correct. It's right. It's a first touch. It's good. But then you don't think about the context. Do we have momentum in our favor? Where are we coming from? Like, okay, yes, that level's valid, but I get this in the chat all the time. Hey, would you buy this level? I'm like, it depends. Like I can't, like, this is why I don't, I mean, it's one of the many reasons why I'll never call out trades or call out levels ahead of time, because it changes. The level doesn't change, but how I'm going to react to it does. So like, yeah, like, on CLOV, I'm more likely to love this 923 level if it snaps right back after a new high, because it's built up. Now, once we extend it up into much bigger levels to the left, we've got these prior continuation longs that are both over here that clearly worked. Once we got close enough to these, now this scares me. Not that it's not valid, but more likely what's going to happen is you're going to hit it and you're going to run into, prior failure short levels because we've gained a third leg to the left. And then we got above this level and we failed and ended up breaking down from there. I don't know if CLOV is going to let me go back that far either. Oh, maybe. Yeah. So CLOV was a great example of, this is the third leg. You break above that. You lost it right here. You tested your failure short. Bam. Like, that's what I do. Like, people get, they pay attention to Nate Michaud and all these other small cap guys, and they're like, oh, they're constantly trading and they're in and out and they grab the top and they grab the bottom. Like, that's because the guy sits on his keyboard and hits his hotkeys 1,000 times a day. Of course, he's going to eventually hit the bottom or the top. I'm not taking anything away from the guy. He's great. And I've actually enjoyed his chat room before. But there's, he talks about wait for the backside for these small cap shorts. And his definition of backside is kind of generic, as are the rest of the people that work with him and follow him. Oh, just wait till it's going down and then short it. Like, that's not a very good, like, the problem is they understand it unconsciously. They have like the ability to see it in their head, but they can't explain it. So they're not wrong. They just don't explain it very well because they don't know how. In this way, it's a little easier because we have rules. Like, okay, is this the backside? Okay, we've gained a third leg. We've lost the segment that gained it. Yeah, I can think about this as potential backside now. So, I mean, thinking about it that way and not always just setting things in stone and being like, all right, I'm waiting for this level. There are times for that. But most of the time, if something is actively trading and has momentum, there are 50 other things that are going on that would allow you to trade and potentially change how you're going to react to a level. Yeah, you're not sitting there going, "Oh, there's a buyer on the bid soaking up stuff, and now they're stopping people out." Like, no, like that's support. Okay, we just satisfied trend, so people just got stopped out, and now there's a potential for a reversal. Like, there's people, I watch level 2 all the time, and I record my screen so I can see all the buyers and sellers. Like, or you could just watch candles. Like, they exist too. So yeah, yeah, and I'm not planning on stopping the videos. It's more about if a week is, I only get like 2 questions, then I'm more than likely. I mean, I could make like a 5-minute video. I mean, I'll probably do that, but you know, it's just we're probably transitioning from guys had a ton of questions that wanted detailed explanation, and now everybody's kind of, most people that have stuck around have moved into action mode. Like they're trading, they're understanding it. They don't have as many questions. Now it's more about process of, you know, narrowing down your watch list and paying it what to pay attention to during the day or when to pay attention to a swing trade. It's not so much mechanics anymore. Yeah, I mean, with these small caps being crazy, I've been really busy, but it's potential to talk about those more often. The indexes they've been in consolidation mode, at least NQ has, so I haven't been really trading them very often the last week or two. Yeah, and you kind of force things to happen in your head when you're just sitting there watching. And one of my partners, he's never at his computer. He looks at legs. There's either a trade to be had or he's waiting on a new leg to be formed. He sets an alert. He goes to play with his kids. Yeah, or he goes he goes for a run or something. And I'm a little more of an active trader, so I'm here most of the time, not all the time. I do the alert thing as well, but in the morning, I'm not like sitting around waiting. There's stuff moving, so I'm trading. Hmm. There we go. Yeah, no, I think that's happened before. Uh, all right, let's see. So short. one up move. It depends. It's so if number one, if that top yellow line is the peak of a leg 3, this is correct. That's the problem with diagrams and why people get confused sometimes, is if you're just thinking about this as just segments, which is how it's kind of drawn, number, like your short would be incorrect. So if that number, if the top on the left is a third leg down, totally valid. So I would, to clarify the drawing, I would probably redo that left side of it and make that look like a three leg. Yeah. Exactly. Yeah, that looks good. Yeah, yeah, just quick glance, that diagram is correct. Awesome. Yeah, dude, you're doing great. You've kept it up. So that's the big thing with this, is people either stick around and get it, or they give up right before they get it. And that's the problem. Like, people are like, oh, I just don't get it. And I'm like, well, it's true. It's just, you just don't see it yet. So it didn't change. Like, that doesn't change whether or not it's real. So you're getting it. That's good. Hmm. It is very true. Everything I say becomes very obvious eventually. And you're like, wow, why did I not get that before? And I get to do a lot of, I told you. But I understand. It takes something clicking for it to, unravel and make sense in your head. All right, buddy. Of course, yeah. Enjoy the rest of your weekend, and we'll get you, come up with some more questions, and we'll schedule, another 30 minutes. And then we could do trade review, we can do follow up, we can do new questions about something you saw. It doesn't matter. You just, whatever you want to do. All right, bud. You too. See ya.